Hey guys, so tomorrow we're going to be getting a really important reading on the US non-farm payrolls, and this figure is going to be closely watched by all investors and traders and those interested in the markets. And the reason for this, and we've covered this, is because Jerome Powell, the Fed chairman, mentioned at the Jackson Hole Symposium that he is looking for more data before making his tapering decision. And what data is he referring to? He's referring to this non-farm payroll, and he's referring to the next CPI reading. Now, tomorrow, Friday, the 3rd of September, is when we're going to get the August reading for the non-farm payrolls. And Jerome Powell is looking for a further improvement in the jobs market. Now, let's take a recap of what we looked at last month. So we saw that the consensus for July was 865 non-farm payrolls. We came in at a beat of 943, which was really impressive and really showed that the job market was starting to strengthen. We saw the unemployment rate drop from 5.7 to 5.4, and we saw the yearly earnings go up from 3.9% to 4%. Now, what are we looking for this month in July? The consensus is for a slight cooling off, but still an improvement. We want to see non-farm payrolls at 750,000. Okay, so that's the consensus. And bear in mind, this would be the 12th consecutive gain, and it's already, the 943 was the second consecutive month where the payrolls outperformed consensus. Okay, so if we get a reading of 750 or above, that would be the third month in a row that we've beaten consensus, and it will show a good sign to Jerome Powell and the Fed that the economy is starting to recover. But it's not as easy as that, because we know that there's a lot of Delta fears. We know there's shortages. And this could weigh on the jobs market. That's why this is such a closely watched reading. Now, the other thing we noticed is if you look at the US non-farm payrolls by industry, this is the July reading and this is the June reading. You can see the June and July reading are heavily contributed by this pink, which is government. So heavy parts of that 943 were government jobs, and will those still be around in the other months? If you were to take out the pink, you can see a slight inflection point downwards if you stop here at the kind of the teal blue color. So that's something we want to watch out for, is how do the other industries perform in terms of their non-farm payrolls. Now, we still know that we're also still 5.7 million jobs, okay, short of where we were in early 2020, okay, Feb 2020, before the pandemic swept away the economy. We are still 5.7 million jobs short. So if we had the reading of 943 for the next 6 months, we'll be back at the pre-pandemic level. So that just goes to show how far off we still are and why we still need to be cautious in this recovery. And that's without Delta having a second dip down on this chart, which could potentially happen. Now, don't forget the worst here was about 22.5 million unemployed. And so that we've definitely made massive progress from there, but it's still minus 5.7. Okay, so a lot of work to do there. Now, looking at the unemployment rate, if I just move me up there, this is the blue line is your unemployment rate, and you can see that this really was high at the peak of the pandemic, hitting close to 15%. Now, we've managed to now slightly trend down. We saw that the unemployment in June was 5.9, it went to 5.4 in July, and the consensus for tomorrow is they want that to be 5.3 for the unemployment. Okay, so they want the unemployment rate to come in at 5.3, so a 0.1% improvement, just to notch us down a little bit here. Okay, again, still a long way to go to get to the unemployment rates of where we were pre-pandemic, but you can see here now, looking at this chart going back 20 odd years, we're at a sensible level compared to where this pandemic took us. I mean, this is manageable. This is worrying, and why we had 120 million of asset purchases by the Fed to get this peak down rapidly. Okay, now, so we mentioned that the earnings is also an important factor. So coming on to the earnings, we saw earnings if we go back to what we saw in July, let's look at that. So we saw in July the reading for earnings came in at 4% versus 3.9. Now the market is expecting that, and they're wanting that to stay at the 4% mark. Okay, you don't want that to go rapidly high because inflation is still a key concern. So if earnings are going up, that means the cost to businesses of acquiring these workers are going up, and that can cause cost push inflation if businesses pass that on to consumers. Okay, so we need to be careful because you've got this double-edged sword. You want to improve jobs and get the job market healthy. At the same time, you don't want runaway inflation. This is the balance that the Fed has to hit before they start making their tapering decisions. Now, another worrying concern we have are the ADP private payrolls. So the ADP private payrolls came in, they had an expected reading of 640,000 jobs, and it came in at 374,000 jobs. So that's super low, although that was higher than the month before, which was 326,000 jobs. But let's paint a little picture behind this, because if we look at the non-farm payrolls versus ADP, you see that they're not always correlated. Okay, so we can see that ADP missed consensus in July, but still US non-farm payrolls smashed it with 943,000 new jobs. So we have to take it with a pinch of salt, but it's not a great sign that you could see your so this is your July and August. You can see your May and June readings were nice and high, and then your ADPs really did fall in July and August. So what is this? Is this effect of the Delta pandemic that we're worried about? Do the US farm payrolls have a lag to the ADP? That's something we'd have to look at. But just because the ADPs missed doesn't mean necessarily that the US non-farm payrolls will miss, because last month that happened, but you can see the discrepancy there. US non-farm payrolls still beat expectations very heavily despite the ADP reading missing. Okay, so there you go, guys. That is what we're expecting from tomorrow's critical non-farm payrolls coming out tomorrow morning for those in the States, tomorrow midday, 1:30ish for those in the UK. And it's a critical reading for the stock market. Jerome Powell will be watching this, and he will be using this as one of his key data sources to decide whether to taper or not. So to recap, we're looking for a consensus of 750 new non-farm payrolls. We want unemployment to fall another 0.1% from 5.4 to 5.3. And we want earnings to remain steady at that 4% level. These are all really important metrics, and we'll be looking at them closely tomorrow. So there you go, guys. We'll see you in the next one.